Impact of corporate actions on CFDs. As a holder of CFD, you are not the actual owner of the underlying instrument and do not have any rights over the underlying instrument. However, you are still entitled for adjustments arising from corporate actions if you are holding a position at the close of the trading day immediately preceding the X date. Corporate actions on the underlying share may affect the underlying share price or quantity and, as a result, may impact the CFD price or CFD position in your account. If such an event occurs, CGS International shall, in its absolute discretion, determine the appropriate adjustments to the price or quantity of the CFD. Key risks of trading CFD. The risk of loss in CFD trading can be substantial, and you may lose more than your initial investment. It is important that you understand the key risks of CFD and consider whether CFD is suitable for you in relation to your personal circumstances, investment experience, financial objectives, and risk appetite. Leveraged over-the-counter products, such as CFD, is not traded on a regulated exchange nor cleared on a central clearinghouse. You do not have the protections normally associated with trading on a regulated exchange. When you buy or sell a CFD, the only asset you are trading is a contract issued by CGS International, who is the CFD provider and your counterparty. You will be relying on the CFD provider's creditworthiness. Counterparty, or credit risk, is the risk that the CFD provider fails to fulfill its obligations to you due to insolvency or default, leading to your positions being liquidated or closed out without your consent. Therefore, choosing a reputable counterparty such as CGS International for your CFD trades is very important. Transactions in CFD carry a high degree of risk. As CFD transaction is leveraged or geared, a relatively small initial margin enables you to secure a larger exposure to the underlying. A small change in the underlying market can have a big impact on your trading profit or losses. You may sustain a total loss of the initial margin and any additional funds deposited with the CFD provider to maintain your position. Positions are marked to market on a daily basis, with payments being settled daily to account for the underlying market movements. You must maintain the minimum margin requirement on your open positions at all times. You will be responsible to monitor your account balance. If the market moves against your position or margin levels are increased, you may be called upon on short notice to make additional margin deposits. If required margin is not made within the prescribed time, CGS International may liquidate any or all of your CFD positions. This may result in a loss for you, which may be substantial. If there is lack of liquidity, that is, insufficient trades in the market for an underlying instrument, you may not be able to trade CFD over that instrument. This means that it may become difficult or impossible for you to close out a position within a reasonable time. At any point in time, if the trading of the underlying share is halted or suspended on the securities exchange, CGS International may require you to post up full margin on such positions. CFD Trading Platform. CGS International's CFD online trading platform and mobile app allow you to place CFD orders, view your account balance summary, and portfolio details in real time. The trading platform supports normal orders such as market order and limit order, contingent orders such as stop-loss order, take-profit order, if-done order, one cancels the other order, and trailing stop-loss order, and order lifetime attributes such as good for the day or end of day, good till cancelled, and immediate or cancelled. Let me show you an example of an if-done OCO order. Key in an order to buy 10 Microsoft CFD at $405. Then you can set your stop-loss order. When the price falls to $400, sell 10 at the limit or market price. At the same time, you can also set your take-profit order. When the price goes up to $420, sell 10 at the limit or market price. If the first order is done, the stop-loss and take-profit order will be activated and one cancels the other OCO orders. From the trading platform, you can also see the estimated margin required, the estimated loss if the stop-loss order is done, and the estimated profit if the take-profit order is done. Stop-loss orders are not guaranteed orders and depend on market volatility and liquidity. All contingent orders are automatically GTC until triggered. Once the order is triggered, it will be good for the day. Reach out to us for CFD inquiries or account opening.